Hello everyone, welcome to today's US Open live session. It is Wednesday, February the 7th, 10 minutes before Wall Street opens at our usual time slot every day to discuss all developments. I am your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM. A bit of a slow day in terms of market actions. There were some news mostly on the stock front. There was a very significant announcement by Disney, Warner Bros. And Fox, their intention to create a new sports streaming super app to combine their efforts. So we're gonna talk a little bit about that because it is a move that could shape streaming as sports becomes increasingly important, sports content. We also had results from Ford overnight, the storied US automaker, which markets generally liked, and there was a boost in dividend. But the EV segment lost a massive amount of money last year. There are also key incoming CPI inflation data from China. And we're also going to talk, as always, about Euro USD and the Nasdaq. Before, however, we begin, as always, please read carefully through the risk warnings and the disclaimers. Once again, please read carefully through the risk warnings and the disclaimers. I will give you a few more seconds to do that, and then we will begin. Okay, let's get the ball rolling. We're gonna start off with Euro USD as usual and see this recovery effort that is underway, albeit frail. We're going to talk about Nasdaq, which does not mind this Fed repricing and carries on. Then we're going to talk about the results of US automaker Ford, which markets generally liked, and especially the fact that it boosted the dividend payout, although its EV segment continued to bleed money. We're going to talk about a new super app that was announced, streaming sports super app by major media giants, ahead, of course, one of them being Disney with ESPN, ahead of Disney's earnings tonight. And we're going to talk a little bit about the incoming inflation data from China. So let's go ahead with Euro USD. Of course, if there are any comments and thoughts on what we're talking about or any questions, please feel free to share your opinion with us by typing your opinion in the chat box. Now, Euro USD tries to regroup after the double blow from the Fed and the NFPs that we already discussed about. We said that it could find support around the December lows, this highlighted area here, and this is what is happening. And now it's a frail recovery, but it gives it an opportunity to extend the rebound. Now, if we take a look at the RSI, let's add the RSI here. Now let's change the parameters just to, let's do 70 and 30. And let's make it a 14. That's my preferred setup. So you can see that the index tries to the RSI tries to move above the 50 line, and that could help this recovery effort and help the pair move higher and try to reclaim the 200 period DMA at around 1.087, roughly that region. Again, this is the area we're looking as a potential sign of that. However, we're not really confident about sustained strength. This, of course, daily close above the 200 period DMA, as we have said before, would pose the downside bias. But with the ECB maintaining and reiterating a reserved approach towards cutting rates, the common currency will have a hard time moving towards 1.1017 and beyond. Now, however, below the 200 period DMA, bias is on the downside. That's the main trend at this point. And there's still high risk for lower lows. The December lows, of course, at around 1.72. which would expose it to the 76.4% Fibonacci of the last leg up. But again, given the murky policy differential, it's hard to see direction either way. But in any case, as things stand down, immediate bias is on the downside. Now let's switch to the Nasdaq. Not much to add here from what we have been discussing over the previous days. The tech-heavy index continues to overlook the Fed's cautious stance on the policy path and prospects for cuts. Market expectations have moderated, but they're still pricing around 125 basis points of cuts. So markets are still optimistic, and that can help the index further. It seems poised to take out the 18K handle. But on the other hand, we see that it sort of struggles over the past few days to make headway, and that creates risk of a pullback. Even if a pullback does come, a more substantial drop that would challenge the 200 period EMA at around a little above the 17K handle, that would endanger the bullish bias, looks like a tall order at this stage. Overall, with markets still pricing in multiple rate cuts and convinced of a soft landing, it's hard to see substantial downside. And the path of least resistance for sure is even higher. Now let's talk a little bit about Ford, the US automaker, the legacy automaker, which overnight announced its latest earnings, which overall markets liked. Revenue increased in 2023, and although pre-tax profits steadied, the company expects them to increase in the current year. What markets like probably more is that the company announced additional dividend for Q1 as it aims to give back 40 to 50% of its cash flow, give it back to investors. So the company had been paying 15 cents per share over the past few quarters. Now for Q1 it will pay that plus an additional 18 cents per share, and you can see how with Wall Street just opening, the index opens higher. You can see that here, around 5%, 5 to 6% higher. Now the stock fell to the lowest level since 2021 in the fourth quarter of 2024 in what was overall a lackluster year. The new year did not start particularly well, and the external environment remains challenging for the auto industry. So that doesn't make us very confident for the stock's trajectory, and there is still risk for renewed pressure back towards the 2024 low, the January low, a little below $11 per share. But further declines to the low from late last year that we mentioned earlier seems a little bit difficult, especially if the stock manages to hold these gains that it's showing now at the open, which are of around 5%. Now, it moves above the critical 200 period EMA, and that now allows it to look towards the 76.4% Fibonacci of its second half of the past year, but it doesn't look ready to move even higher towards the July high. Now, there were actually quite a few things that were not good from Ford's report and could cause reason for concern, and this to translate into pressure for the stock, as we said. Most of all is the poor performance of the EV double compared to 2022. EV adoption has slowed, and the company has scaled back and or delayed investments, looking now towards hybrids with, let's say, more focus. And of course, it announced, it spoke of plans to launch an affordable EV, similar what Tesla announced, but it seems to be quite early yet, and it didn't provide any time frame. But I have said before that given this dented demand and the current external environment of high interest rates and elevated inflation, the key to mass adoption are cheaper EVs, which are generally priced substantially higher compared to internal combustions or even hybrids. Now, let's turn our attention to an overnight piece of news, which was that Disney subsidiary ESPN, Warner Bros., Discovery, and Fox announced their intention to create an all-in-one sports streaming platform that would combine their relevant networks and house major events like NBA, NFL, NASCAR, Formula One, and more. Just yesterday, if you happened to see our session yesterday, we talked about Disney's outlook and the earnings it is releasing tonight, and we spoke around the increasing significance of sports content. And now we have this announcement. This new platform could save the streaming market. Linear networks are still the main venue for sporting events, but there is a transition into streaming. We had talked about how Disney is looking to take ESPN fully streaming. Other streamers like the services from Amazon and Apple also have major sporting events on the internet, and the move could put pressure on the leader of the streaming market, Netflix, which does not have a live sports offering. It only now announced its entry into the arena with the wrestling event WWE Raw, which will be broadcast by Netflix starting from 2025. In any case, we will be monitoring these developments around sports streaming closely, and we will be looking into more color around it from Disney CEO Bob Iger during tonight's earnings release. And let's round things off with China and the inflation data, which are due uh, a few hours essentially ahead of a series of holidays which kick off later in the week. The country has been grappling with deflation, with CPI in negative territory for the past 3 months. You can see here the development, and essentially around zero since April, since the start of the second quarter. And things are even worse on the producer side. Recovery has been uneven. You can see here back in November 22. After that, we saw a pickup and into the new year as the country abandoned its strict zero COVID policies. But then we saw a decline again, and demand is weak despite efforts recently by authorities to reinvigorate it. All in all, China's recovery has been uneven, although there are pockets of strength. In general, it has disappointed, and authorities have not implemented any sweeping sets of monetary and fiscal stimulus, but have rather adopted a piecemeal approach that has failed to reinvigorate the economy and, of course, inspire stock markets. The problem is that going big on fiscal stimulus could endanger the country's credit ratings, and local governments are generally stressed due to the pandemic impact, while monetary stimulus, slashing rates, although we have seen some cuts in some rates, could put further pressure on the already weak currency. So it's a bit hard for them to go all out in terms of stimulus, either monetary or fiscal. As we now are about to end our session, if there are any comments, thoughts, or questions on what we discussed, now would be the time. Just to recap, we have the CPI inflation from China coming up. Key earnings from Disney is the one I will be most looking forward to, but also chip designer ARM Holdings, which was the blockbuster IPO, initial public offering of 2023, which we had covered back then from this venue. And overall, we have a lack of direction in main forex markets and Wall Street, but we see that the Nasdaq generally does not mind the Fed's pushback against rate cuts, but they do contain the upside. That's it from me for today. Thank you for joining me. We will talk again tomorrow at our usual time slot, 10 minutes before Wall Street opens. Thank you.